President Trump dropped a bombshell on the global trade scene. He imposed new tariffs on goods from Canada, Mexico, and China. These tariffs are essentially taxes on imported goods. A 25% tariff was slapped on goods from Canada and Mexico. China faced a 10% tariff. This sent shockwaves through the markets. Traders and investors were left scrambling. The markets braced for a trade war. Uncertainty gripped investors. The fear was palpable. However, there was a glimmer of hope. President Trump offered a temporary reprieve to Mexico. The tariffs on Mexican goods were put on hold for a month. This calmed the markets momentarily. The tariff announcement sent a ripple effect through various sectors. The auto industry, heavily reliant on global supply chains, felt the heat. Tech companies with their complex international manufacturing processes also experienced tremors. Banks, particularly those with significant exposure to Mexico, like Citigroup, saw their stocks tumble. The markets reacted swiftly and dramatically to the tariff news. The CBOE Volatility Index, Wall Street's fear gauge, spiked. It surged past 20, signaling heightened anxiety among investors. The stock market took a nosedive. The Dow Jones Industrial Average, the S&P 500, and the tech-heavy NASDAQ all tumbled. Just when panic seemed to be setting in, the Mexico tariff pause was announced. This injected a dose of optimism. The iShares MSCI Mexico ETF, which tracks Mexican stocks, rebounded sharply. It erased its earlier losses and ended the day significantly higher. Amidst the turmoil, there was a beacon of positive news. The U.S. manufacturing sector showed surprising resilience. The ISM Manufacturing Index, a key indicator of factory activity, climbed above 50. This signaled expansion in the sector for the first time in months. The tariffs created clear winners and losers in the stock market. Citigroup, the banking giant, emerged as an early casualty. Its shares plummeted nearly 5%, a steeper drop than its peers. This was largely due to Citigroup's significant presence in Mexico, where it owns the Banamex banking franchise. Canadian banks also felt the heat. The 5 largest Canadian banks experienced declines in their U.S.-listed shares. The tech sector, represented by the XLK ETF, wasn't spared either. It joined the downward spiral as investors fretted over the potential impact on global supply chains. Auto stocks, heavily reliant on cross-border trade, were among the hardest hit. Giants like General Motors and Ford saw their shares decline. The pain wasn't limited to U.S. automakers. Global car manufacturers, including Toyota, Honda, and BMW, also experienced declines. The tariffs sent shockwaves far beyond Wall Street. International markets reacted with a mixture of apprehension and defiance. European stocks opened lower, mirroring the sentiment in the U.S. The Stoxx 600, a broad index of European companies, fell sharply. Governments around the world weren't taking the tariffs lying down. Canada retaliated with tariffs of its own, targeting $155 billion worth of U.S. goods. Mexico threatened similar measures. China, already embroiled in a trade dispute with the U.S., announced plans to file a lawsuit with the World Trade Organization. The tariffs injected a fresh dose of uncertainty into the global economy. The strength of the U.S. dollar, which typically benefits from such uncertainty, rose. Bitcoin, the digital currency often seen as a safe haven asset, dipped initially but later recovered. Gold, a traditional safe haven, edged higher.